it's me. I'm back, and thank you for watching. It's been quite a wild week and a half. As you know, we were in Paris at the Technical Analysis Conference and flew back, got into Charlotte, a little layover, which should have been 3 hours, lasted, I think it was 21 hours, something like that. Bad weather in Charlotte, flights were canceled. Wow, what a mess. But anyway, we're back in the saddle. It's good to be here. Let's give you some updates as to what's going on in the marketplace, what we're doing, and what I see moving forward. First and foremost, we've got, as you can see from the board here, we've got a position in VXXB. However, for our clients, let's take a look at this chart here. And this is the live trading room, guys. This is the what we see here in our for our trade room, and the positions, as you can see, we have a short position right now. That was the stop loss. This is the potential profit, unless it either A, maxes out, trails out, meaning a trailing stop function goes and it stops out, right? So the position short ahead of tomorrow's bank earnings with Wells Fargo. And again, it's really an interesting market as far as how the interaction between volatility is happening and the overall market. So as you can see, there's been at times this year a disconnect between volatility and the stock market. Usually speaking, volatility will go down when the market goes up. In this case, we've had the markets test newer highs, and the volatility has not tested its low. But now the foot's on the other shoe, or the shoe's on the other foot in this case. We have a new breakdown, a new low from the March low in volatility, but the S&Ps hasn't taken out their highs. So with that said, our current position, short volatility. For J-Person Asset Management, though, for some of the clients that have the 401k accounts, they can't sell short. What do we do for them? We go long SVXY. And this is our actual position right now for our clients. And we are long the SVXY and our stop. And as you notice, it trailed. So we have right now locked in place a trailing stop. What's the problem with this outlook? Well, the market gaps lower tomorrow below our stop level, then we're going to have slippage on that. So that's the one mitigating factor when we look at stops on overnight positions. But the way this looks, let's take a look, man. It's very impressive how it broke out and closed and stayed above. Look at all these closes above the line. The whole day, every hour, we stayed above this pink line, which is resistance, and that's a positive thing. So we're looking for further upside out of SVXY, further downside in the VXXB. Now, we also, for our clients, or at least right now, we have a position we decided to go with, rather than looking at just the S&P, the spiders, we went with the leveraged ETF SPXL. We have a long position in the market. Yeah, we're up a little bit of money. It's not a big deal. The question begs, is this market getting ready for a new frontier breakout? And that is our contention right now, and I'll share with you those reasons in just a minute. So first and foremost, let's take a look. It's been kind of a, as you can see, we've had some really good trades, and we've had some choppiness over the last couple days. And so at this point in time, we've gotten in, gotten out a little bit, and we're back in the saddle. If the market, by the way, if the market is in this, what I would consider like a channel, and then we go through a consolidation phase, and if this would be considered A, and this is B, and this is C, then the D wave is way the heck up here, a measured objective around 52.5, and that's all very positive. So what we would want to see is a close and a breakout greater than, and not just one bar, but we want to see at least two bars greater than that $50, and that would give us some pretty good insights, accompanied with an upswing in the volume, that we're going to see that follow through trend. Now, here's an interesting concept that we like to focus in on, is looking at the condition of the market. Why am I kind of hopeful or more pressed to believe that the market is capable of further upside from here? Number one, the advanced decline perked its head up and made another new high in the cumulative AD line. that's a very positive sign. Now we are sitting here at this yellow line. This yellow line is what? Old resistance. How old is that resistance? Well, it's last September, the high that we saw in the marketplace. And I want to address a couple items here in this chart. Someone had asked me, hey John, do you see a triple top in the market? And the answer is, sure I do. Let's take a look at the indicators though. We're going to format analysis technique. Let's look at on balance volume, format this, put it back into scale. Let's get going here. Come on, time's a ticking. Volume indicator, format. This is our proprietary volume indicator. It is amazing. It is, it is the one tool that if I get stuck on an island, I want this tool, the person volume indicator. It's a proprietary volume. It not only looks at the momentum change of volume, but it also gives us a trend of volume in terms of percent change. It's really a dynamic tool. All right, so what I see on a weekly basis, guys, ladies and gentlemen, is the advanced decline broke out. Volume is, the momentum is declined, and the only, I guess, explanation that we could say the volume is, the momentum's declined is because we went through a period of choppy 4 or 5 weeks, 1, 2, 3, 4, 5 weeks where we went sideways. Last week we finally broke out, and look at where we drew that line in the sand. The line in the sand on the charts is from the last conditional change resistance from the second week of October, and that is where we're at. Volume levels are actually higher than where we were then, so that's a positive, and the advanced decline is also positive. And all of that does what? It points to higher prices to come until proven wrong. The trend is your friend until proven wrong. At what point am I proven wrong? Well, first, we would close lower than a prior week's low. Second, we'd probably need to close below the weekly pivot or monthly pivot in this case. And as you can see, the trend is up, the breadth is up, and the volume is still doing okay. So for the week, we are stalled against an important impasse of resistance, and that's this line in the sand. And if we get some good news out of maybe the bank earnings tomorrow, or if there's maybe some hint that the economy is not as dire as what the market believes it is, because remember, this market, a lot of people think we're going down because we're entering in a recession. And to be honest with you, I don't see it. It's not in the work that we see as far as economic numbers, number one, and number two, we've got the Fed that's at least admitted to be on pause. These guys cannot come and say, we're wrong, we're going to raise rates. That would be a disaster. So for the next 6 to 8 weeks, or at least let's call it the rest of April and into maybe May, we have all kinds of sectors that do generally well. And so with that said, if we only get half of those sectors to do better, transportation, airline stocks, and we're starting to see that right now, then we can get better liftoff in the indexes. And so that gives us the idea to still stay and remain on the long side. Now, we did take a small position in TNA in looking for a breakout with the Russell. And we had this little breakout. We got long in TNA, but today, to be honest with you, we dumped the position. And the reason we dumped the position on TNA, friends, was mainly because of one factor. The biotech sector took a major hit today. So IBB didn't break out, and the regional banks kind of went up, and energy didn't really perform well. So all of those subsectors weigh on the overall Russell small cap growth, and we just didn't feel compelled to hold a long SPXL, long TNA, and again, a bearish bet on volatility. But it is my contentions that so far the trend looks good, number one. Number two, the breadth of the market looks great, as you can tell. But I just don't think that all sectors are kicking into high gear, and we're getting a very, very sophisticated sector rotational grind. And there's a lot of asset managers that are long stocks that are looking forward to taking some profits on each successful rally. It's hard for me to say that. So I think this is a very liquid market. It's a very fluid market, and it can change on a dime. And I can tell you this, one of the questions I always ask myself when I'm in a position is if I'm nervous about the trade, and this is a great lesson for everyone. If I'm nervous about this long position, what on this chart makes me want to flip and go short? Nothing right now. The trend is my friend. The trend is up. I've got I guess there's a couple things that we could maybe point out. Is this, I wouldn't call this a diamond pattern. If it would, it'd be, maybe it's a continuation, but I can definitely say it's more of a consolidation, choppy trend. Would I go short this market? No. Would I add to longs in this condition? No. But I would add to longs if we have 2 period closes greater than 50, because this would be, again, like I pointed out earlier, an extension for upside. And that is the risk. Melt up, not melt down right now. Everyone thinks this market's overbought. Everyone thinks this market can't go any higher. And yet, the indicators are pointing to higher prices to come. I hope you enjoyed this outlook, and I am glad to be back in America. And again, when we get to tomorrow midday session, I'll upload another video, and hopefully the quality issues have been resolved and we took care of that for you. Thanks again, everybody. We'll see you next time. Oh, and by the way, it's time to watch the Masters golf. It's that time of year. Phenomenal golf at Augusta National. Take care, everyone.